Well, hello. This is Dean Tenney again, coming from my studio here in fabulous Las Vegas. I'm trying to finish up this explication of the FINRA content outline, and somebody pointed out to me that this is not on the channel, so hopefully we will be able to get this up here, and that'll finish it out. If not, if it's already on the channel, well, then that means we've explicated it twice. Oh well, better to have too much than not enough. All right, so this is 3.3 on the content outline. Material is really a key word on your exam. Material means something that would alter somebody's investment decision. I saw a broker being interviewed and he was asked why it is he didn't share this information with the customer. He said, I thought I'd lose the sale. That means it's, the all-time worst answer you could possibly have. So you always are disclosing material. If you want to stay out of trouble, you'd say, well, I don't think it was material. Control relationships, we've talked about elsewhere, but that's very testable. I think the best example, maybe that most people would be familiar with, is Merrill Lynch and Bank of America, right? There's a control relationship between the issuer and my example, Bank of America, and Merrill Lynch. And that will be disclosed on the comm firms, research reports, whatever it happens to be. I'm just choosing that, but it could be any kind of a situation like that. Always going to be disclosed. By the way, that should be your default, is we should always disclose everything, right? We've talked about call risk before. We said call risk is associated with a declining interest rate environment. That's very testable. And we've talked about that elsewhere. And we said what prevents the issuer from calling the bonds is call protection. Again, very testable. And declining interest rates are associated with call risk. And we said that prevents the issuer from doing that is called protection, which is the time and the price. Systematic risk is testable. Systematic risk is risk in the system, the tendency of securities prices to move together. The tendency of securities prices to move together. I think of it as when bad things happen to good stocks. Whoop, let me get a different color. The way they test this on this is risk prevails despite diversification. So, I don't care if I've properly diversified you. I do care, but I mean, it's not going to protect you. So you say, well, Dean, couldn't we have diversified the portfolio to prevent systematic risk? I know, no, risk prevails despite diversification. So, the idea that there's a risk of a crash, then that would affect all the securities rather than just some of the securities. Non-systematic risk is testable. That's also known as selection risk. And that one's very testable. And AKA selection risk. And the easiest way to avoid that test question is to diversify. And the easiest way for people to diversify is in a mutual fund. Reinvestment risk is associated again with a declining interest rate environment. A declining interest rate environment. Every 6 months you're going to get a check and you got to decide what to do with it. Or, the investment's over and then you got to redeploy the capital and you can't get what you want. Now, what they like to ask about reinvestment risk is how do you avoid it? And one way you can avoid it is with a zero coupon bond, because you're not getting paid every 6 months. So you don't have that, not confronted with the idea that you may not be able to invest the coupons at the same rate of return. So zero coupons. I'll say no. I'm oversimplifying that, but I'll say no reinvestment risk. What you might have is a bigger problem at the end, but along the way, you don't. Types of investment returns. You should certainly know that tax exempt interest is associated with muni bonds. And then, in terms of suitability, you have to be able to do taxable and tax-free equivalent yields. So tax exempt interest is what you collect from muni bonds. Return of your capital, be careful on this return of capital concept because, in bonds, for example, well, in stocks, the way I get back my capital, more of it or less of it when I turn my money into the security, and then I might turn my security back into the money. And so I have the risk that, that's going to be less money or less purchasing power. But here it's mainly about bonds. In bonds, I get a return on my capital, and then at the end, a return of my capital. So if I bought $100,000 worth of 6% bonds, on that last check, I'm going to get 103,000. I'm going to get my last, my last interest check and a return of my principal. So in most bonds that we've discussed, or most debt denominated securities, you're getting a return on your capital, and then at the end, a return of. And what we mean by that is you're going to get your semi-annual interest payments. And then, at the end, you get back your principal. And so at the return on your capital at maturity or at call, you get your return of your principal. Now, the reason that's important is because we have one investment that you get tested on where you're getting a return of your capital as well as your interest every month. So we only have one product or one investment vehicle where you get an interest, you get a return of your capital each month. You get return of capital and interest each month. Return of capital and interest each month. And that is very testable. And that is a Ginnie Mae. Costs and fees associated with investments. We talked about markups. I work the bond desk or I work the over-the-counter desk for stocks. Some stocks trade over the counter, all bonds trade over the counter. And if I work the bond desk, I charge markups. If I charge, this is what broker-dealers, right? Broker-dealers charge markups. They charge commissions. We have different share classes, and the share classes are A, B, C. And what we're worried about is misuse of no-load terminology. Non-discretionary fee-based accounts where, we don't have the authority, you're still charged paying a fee. And there's no real high-risk test questions here. 12P1 fees are testable. And a 12P1 fee is a promotional expense paid by a mutual fund. It's a promotional expense paid by a mutual fund. And the test question, as I mentioned about these fees, are not so much, lots of test fodder here. It's just really knowing about, what are the max. And so the max I can charge and still refer to myself as a no-load fund is 25 basis points. And if I charge that, then I can still refer to my fund as a no-load fund. If I charge more than that, I cannot max and still be no-load. And then under no circumstances, I'm supposed to charge more than 75 basis points. That's 1/4, 1%. So I go past 25, can't call myself a no-load fund anymore. In no circumstances can I charge more than that. Soft dollar arrangements. Soft dollars is compensation paid by a broker dealer to an investment advisory firm, saying, listen, if you send clients my way to my broker dealer investment advisor, I'll provide soft dollar compensation to you. If there's something my broker dealer can pay for that helps you help your clients, let me know. Those are called soft dollars. And the test question is what the soft dollars can't pay for. They can't pay for travel. So a broker dealer can't pay for an investment advisory firm's travel costs. They can't pay for furniture. They can't pay for rent. And, I can pay for seminars. I can pay for, subscriptions for you, that kind of stuff. I wouldn't worry at all on the test about the unification of gift and state taxes or, Yeah, stuff. They don't like to go back and change there, but the annual gift limit right now, and that's why I say I wouldn't worry too much about it, because they don't like to go change things in the Q bank of the real test for these kind of things. But right now, the gift limit without incurring the wrath of the gift tax is 15,000. And like I say, at some point they might change that, but who cares? I would know the difference between a gift and inheritance of securities. So a gift, the recipient, let me get my different color going here. The recipient assumes the donor's cost base. And an inheritance, I would know there's a step up in the basis. Again, in these explications, I'm not lecturing. I'm just helping you do a intellectual inventory of things you're held accountable for on your exam. So, this isn't, I'm not going into a lecture about taxation. Anyways, there's a step up. I would know that. The IRS assumes you just transfer those assets to your heirs when you die. Market sentiment, market indexes. The only market indexes I would be aware of for your exam would be the Dow Jones. Charles Dow was the inventor of Dow theory. And, he has the industrials, he has the transportations, utilities. And his theory is that, those indexes can confirm the trend, whatever the trend may be. And so Dow Jones, and the thing that makes the Dow Jones so crazy is it's price weighted, which is stupid. So what I mean by that is they just add up the stocks, they divide it by that. The other one I would know is the S&P 500. And, this is mainly about, if somebody says, Dean, I don't believe there's added value in, buying or paying for active management. I'll be willing to accept whatever the market will give me. Maybe I buy you an S&P 500 index fund. And then the last one I'd be aware of is the Wilshire 5000. And the Wilshire 5000, remember, reflects the total stock market, the total U.S. stock market. That would be the question you would receive about that. Options volatility. The thing we want you to know there is the VIX, known as the fear index, and the VIX usually goes the opposite way. It's about the put and calls. Usually people are willing to pay more for protection puts than they are for calls. And so that's a measurement of, options volatility. Market momentum, short interest. Short interest is how many people are short the stock. And what I would know there is we have what's called short interest theory. And theory is never true. Theory is just a way of explaining things. And the more a theory can explain, the better that theory is. And short interest theory says that it's kind of counterintuitive. It says that short sellers can accelerate bullish trends because, when the market starts going up, they get called away, right? Or they get a maintenance call and they have to buy to cover. And so short entry says, let's put that here, that short sellers can accelerate bullish trends. Let's see, index futures. I haven't anybody tell me they've seen anything about index futures. I haven't anybody tell me they've seen anything in a long time about the bond buyer indexes. The main thing is know the bond buyer is a newspaper widely read in the municipal market. Definitely would know that. And then, we publish a note of sale there. So I haven't seen any other questions in this on that in a long time. In terms of technical analysis, I would definitely know that head and shoulders pattern. I haven't anybody tell me they've seen any of those others, but head and shoulders is testable as a pattern that you need to recognize on your exam. Technical analysis, so we're using past price performance to try and indicate future trends. So I'm typically not going to be interested in a balance sheet or an income statement or a statement of cash flow or the economy. That's a distinction between fundamental analysis and technical analysis. I've had somebody ask me or has a lecture request in, that I honor lecture requests. So if there's a lecture you want, just let me know. It might take me a while to get to it. But anyways, they're asking for a lecture on fundamental and technical analysis. And so some point we'll have a lecture for that up on the channel. But for right now, we're just helping my man Joe get as many of these explications under his belt before he tests Monday. So as I always say, if you're good to mama, mama's good to you. Right? So this is a signal reversal. The regular head and shoulders pattern is the end of the bullish trend test question and the beginning of the bearish trend. And then the upside down head and shoulders pattern. So the upside down head and shoulders is the end of the bearish trend and the beginning of the bullish trend. Let's fix that. Breakouts. As a technical practitioner, I'm always looking for a breakout. I mean, technical practitioner, I'm technical analyst. I don't believe in buying the stock when it's stuck in a trading range. I want the stock to break out. I either want the stock to trade, and again, this is testable. I want to trade, break through its resistance line. I would be trading up. And what I would do as a technical practitioner, the resistance is the upward line on the chart. And what I might want to do is place a buy stop above the resistance line to go long, to establish that position. I'm not going to want to do that until it trades out or through the resistance. That's that upper line on a chart. And then support is testable. And support is that bottom line on the chart. And again, as a technical practitioner, what I might do there, because remember, I'm not interested in buying while it's staying still. I'm interested in buying once it breaks out, it makes its move, trades at or, breaks through its resistance or break through support, because then I'm going to be going short, right? So here what I would do is place a sell stop below the support line to establish a short position. Moving averages, I wouldn't worry about stabilizing. That means it's not really going anywhere. I wouldn't worry about retail sales of municipal bonds. We've talked about disclosure of the yield to maturity, yield to call. You don't need to disclose a catastrophe call to the investor, but I think we've done that. We've talked about financial exploitation of specified adults. So FINRA wants you to have in your written supervisory procedures some kind of thing about what you're going to do to protect seniors, trusted contact person, or whatever. What a mess this looks like. I don't know what happened here. It looks like something happened here. But I'll trust our candidate who went through this. He said he's been going through the explications. And he said, I missed this. And I don't doubt. I mean, I have no reason to believe that I did miss it. Worst case is it's up twice. But maybe this is why I didn't do it. Maybe it was messed up. But anyways, customer confirmations and statements, very testable. Confirmations have to be in the mail by settlement. So confirmations, let me get my different color. Yeah, what happened to my different color here? There we go. And I would know who does that, by the way, in mail by settlement. And, the purchase and sales department is the department of the brokerage firm. Purchase and sales department. They're the ones who match trades and generate confirms. They match trades and generate confirms. Now, if we're the buyer, then there's a seller. And, here in terms of matching a trade, sometimes the trades don't match. And then in the back office, we'd have to fix it. So sometimes, the P&S department will have what they call a DK. A DK means, the contraparty doesn't know the trade. And then, we got to fix that. Again, I wouldn't worry too much about this on the test. Let's see. We have to send statements quarterly. Very testable, unless there's a penny stock in the account. In which case, then we do it monthly. Monthly. Yeah, penny stock is a non-NASDAQ OTC stock under $5. We will send things to third parties, but we'd want to make sure that we have your permission to do so, right? Account value, what should be on the statement? Account value, profits and losses, realized or unrealized, would be on the statement. Withdrawals, any tender offers you've accepted would be on there. Customer account records, very testable, updating. When we open the account, we say, hey, within 30 days, we're going to send you a copy. I want you to look this over, make sure it's all good because it's really important. So within 30 days of account opening, we're going to send you a copy and say, hey, if I didn't get that all right, let me know. And then every 36 months, we're going to send you a copy because we know that people's, situation could change. And anytime there's a change in the, anytime there's a change in the account, that'll kick out another statement to verify, basically. Transferring ACATs. I don't know if anybody gets it done this way. ACATs, you have 1 business day to validate. So I'm, leaving broker dealer A and I'm going to broker dealer B. So I do with it 1 business day to validate. Oh. One business day to validate. And 3 days to transfer. Books and records, I wouldn't worry too much about lifetime. A lot of study materials, remember, they have to follow the outline, put all this stuff in there. The vast majority of broker term records are 3 years. Very few lifetime are 6. You join me for 24. We'll go over all that. Customer complaints are a 4-year record. Again, I wouldn't worry too much about that on your exam. Count clone, let's see, MSRB. Okay, I think I got it done this time. So 3.3, 3.4 is what I was told was not up on the explication. So this should have taken care of 3.3 and 3.4. I'm going to post this, as I mentioned. I'm going to post this right away because we have a guy testing Monday. Now, listen, I got myself into trouble. I'm not blaming anybody but myself, but the channel's been up and running about 6 months, and we got way more content than I ever planned on having in 6 months. My original plan was to publish a lecture every week or so, and I get into this habit. Sometimes it's my own personal weakness where, as I mentioned, if you do things for me, I try and do what I can, and then I get myself in a situation where I can't keep up with people's test dates. So I'm not saying I'm going to honor publishing schedules based on people's testing date because everybody's different, and I tried it, it doesn't work. But in situations where I can, if you're testing, you find something useful, I'm going to try and do as much as I can to meet you on that. So this is going to be no premiere. Premieres, remember, we usually have a live question and answer chat. But this guy's too close to the test date to make that work. So I'm going to publish this immediately on the channel for him. Remember to give me any lecture requests. Where we're at, I'm hoping I'm going to get the explication of the 7 done. So we have SIEs done. 7 is coming down close. I got a couple more sections of 4 to do, but that'll be done. And then hopefully I'll get ahead of this candidate, and I'll be waiting for him with the completed explications of 65 and 66, which I've started. And then the last explications will be 63 and Series 6. I also have an unethical business practices lecture I'm working on. I got a practice exam final 3 I'm working on for Series 7. I'm working on a practice final for the Series 65. So a lot of work ahead of me. And I hope you're finding these useful, and I will see you on the next one. Remember, like, share, subscribe. And I'm pretty good. If you have questions in the comment box, I'm pretty good at getting back to you pretty quickly.